Okay, well, U.S. markets are up about 15 minutes into the trading session. The retail market on a streak this morning. You can see Limited and Gap both up more than 5%. Also trading higher is aluminum giant Alcoa. Retail sales, by the way, coming in all throughout this morning and for the rest of the session. In the meantime, got something to sell? Well, my next guest will likely find a buyer. He's built a business out of trading illiquid assets, everything from CDOs to mortgage-backed securities to maybe even ice skating rinks. Barry Silbert is founder and CEO of SecondMarket and was just named the top entrepreneur by Crane. So congratulations, Barry. Great to have you with us in the studio.
Thanks for having me.
And by the way, you've done $1 billion in trading, I believe, last year. None of that, though, does include ice skating rinks, though, right?
No, not yet. Fortunately, there's about $5 trillion in assets we're already focusing on, the toxic stuff and other ones like that.
Right, but you've had inquiries on something as unusual as that. In the meantime, though, your bread and butter right now, some of it, the toxic assets that we've been hearing so much about, right? How have you been able to match buyers and sellers when in the regular markets we haven't been able to?
You know, the key to success really is creating a centralized, transparent marketplace where you bring together lots of buyers and sellers. And so we have about 4,000 buyers signed up already. You know, all the global institutions, hedge funds, folks like that, but also providing lots and lots of information about the assets themselves, because that really didn't exist before.
Mm-hmm. Now, give us a breakdown of how much of your trading this deals with CDOs, how much of it, give us a breakdown of your trading.
Yeah, so we've have 8 different markets, ranging from something called auction rate securities all the way up to most recently private company stock. The toxic assets, which are CDOs and mortgage-backed securities, are still about 25% or less of our business right now.
And is that the most in terms of a chunk?
On a percentage basis, actually, auction rates is the largest percentage. We've done about $1 billion this year in transactions, and auction rates is the largest percentage still.
Okay, and do you expect in the next few years that this pace of growth that you've seen is going to match what you've seen in like the last 18 months per se?
We're really, really excited about what's in store for SecondMarket, because we're adding new markets. We have about 50 different asset classes that we're keeping track of right now. Our volumes are growing well over 100% per year, and that 4,000 buyer count, it was only about 1,900 about 6 months ago. So
Really?
We're seeing a real pickup in interest from the buy side.
Now, some would say, though, that the reason why is because there's no market for these instruments, right? But when the economy turns around and trading becomes more normalized, that in fact, that will mean that you'll go out of business, or you'll see less need for your markets, for what the markets that you provide.
Well, we actually started in 2004, and so for the first 3 years, we were growing over 100% per year in a healthy situation, healthy economy. We're excited about the future because as the economy turns, investors are willing to take on more risk. So you're going to see more and more demand from the buy side, and you'll see new securities being created. You know, CDOs Part 2 and toxic assets Part 2. We intend to create a market for the new securitizations.
But do you expect, though, that you will see some loss, though, or some transfer from the trading in your markets to going back to the regular markets? Is the best I can kind of phrase it.
Yeah, I think we're most excited about markets like the private company marketplace. We've created markets in companies' stock like Facebook, and we have interest in Twitter and Tesla and LinkedIn. So a market like that, given that the IPO market really is fairly slow still, we'll see just more and more demand coming in from investors wanting to buy the private companies before they go public.
But why wouldn't a Facebook want to wait out the market turmoil right now before doing an IPO? Why would they want to go to your company first before going public?
Well, the unique model that we've created on the private company side is we actually give the companies complete control over their marketplace. The idea is to allow them to decide when their markets are open, who's buying, who's selling, what information is being provided. Because the average time now between getting funding and going public is 10 years. So if you think about that, if you're an employee, if you're a venture investor, to have to wait 10 years for an IPO, you're going to need some type of liquidity, most likely, in years 4 to 10.
Okay, and you had mentioned this, but there was one market that you wanted to try to make a market on, or one instrument, I should say, you try to make a market on, which is California IOUs, but you run into problems, though, with regulators. What exactly is happening there?
Well, we were the solution. What happened was when California started issuing the IOUs, people started trying to put them up on eBay and Craigslist.
Yeah.
So we're a regulated entity, and very quickly, through discussions with the SEC in California and D.C. and the California Treasurer's Office, we were able to create a market for the IOUs in 6 days.
Wow. Okay. Not a whole lot of time, Barry. Just last thing, what other illiquid assets would you like to make a market on that you're not already? What would be your ninth one?
Yeah, we're looking at asset-backed securities. It's really important to restart the securitization market, so we want to create a robust marketplace to bring those investors back into that market.
Okay. All right, Barry. Thanks so much. Great to see you. Barry Silbert, founder and CEO of SecondMarket.